and welcome to the second video I will be making on order flow. So in the first video is more of a beginner's guide, and in this video we're going to get a little bit more complex into trading order flow and interpreting the order flow. So the first thing I want to go to is respect to order flow. There may be a bid wall and there may be an offer wall. Remember offer wall that I explained in the last video and bid walls that I explained in the last video. Check that out if you don't know what bid and offer walls are. There may be a bid wall and there may be an offer wall, but if it's not respected, then it doesn't really count. What I mean by a respected bid wall is a bid wall that stays at the same price and stays high. If the bid wall is very high, so let's say the bid wall here was like 50 and there were only like 10 offers here, but then this 50 went down about 10 bucks. And then when price climbed down to that, went down another 10 bucks and then just keeps going down. That type of bidding is not strength. That is market weakness. So it's important to not just look at the numbers and quantity at the traded price, but more importantly to see if it's been respected. And if it has been respected as a bid wall, then that might be a very good trading opportunity. Another really important thing to look at is trends in order history. So in the last video, I went over important points like hundreds and support and resistance that order history comes into play. But another thing you want to look at is how the order history trends. Usually, order history is not choppy. Usually, it's either predominantly red or predominantly green. Sometimes they have small patches of the other, but usually, as you can see here, it's predominantly red or predominantly green in a trending market. So what you want to read, and this is not as tough, but it is quite important, is that you want to see just how much bearishness, as in all the red and all the selling that's going on, there is in the market to see if there actually is a sustained downtrend. Because a downtrend will continue if there continues to be sellers who are willing to sell at a lower price. If there are not sellers who are willing to sell at a lower price, then price will go up or consolidate. Same with a bullish situation where imagine this was all green and many Bitcoin were being bought and the market was trending upward, like let's say this structure. If at these points you continue to see large amounts of green Bitcoin, green over here with Bitcoin being bought, then you could expect that the trend will continue. But if you see that we start to see a sell-off, a large amount of sell-off, and that becomes the dominant trend, as it did over here, then you want to exit the market immediately. As sentiment has changed and the market is ready for a downtrend, you should be taking profits and looking to buy at a more attractive price. And for looking for that attractive price, what you want to see is something a bit like this, where you start to see a flood of buyers come into the market. When you start to see this flood of buyers come into the market, what you need to do is not just buy right away, but check order flow here and check if we have a bid wall forming. For example, if this number was going much, much higher than this number, we can call that a bid wall. Or if the offers were not being respected. And like I said, with respect to order flow, if this was jumping up and up and up and up without any of these orders actually hitting, then we would expect the market to go upward. So that video that I made first just went over simple order flow and how to read it, and this video just was only slightly more complicated in going over how to interpret the sentiment changes in trends and to look at the respect that order flow gets and the disrespect that order flow gets and how to trade off of that. Thank you guys for listening, and part 3 will be coming out soon.